So hello and welcome to the latest edition of the Purple Sofa podcast. My name's Andy Steele.
I'm Sophie Holmes.
We're both directors at 360 Chartered Accountants, and today we're going to be talking about tax returns and self-assessment. So Sophie, what is a tax return?
To summarise, a tax return is a form that any individual or partnership, somebody who maybe has rental property, that needs to declare their income annually to HMRC. What
period does a tax return cover?
So a tax return will cover the 6th of April to the 5th of April, which is the tax year. And
that's a really weird date range, isn't it?
Yes.
6th of April to 5th of April.
Yeah.
Nobody really knows why it's the 6th of April to the 5th of April, do they?
No, and they're changing the rules over the coming year where if you're a partnership or a sole trader with a business, that year end has to be 31st of March as well. So it aligns with the tax year. So partnerships, sole traders used to have any year end, but they're all in the transition at the moment of moving theirs to be 31st of March / the 5th of April.
Okay. So who needs to complete a tax return?
So any individual earning over £1,000 would need to complete a tax return.
Self-employed individual.
That's right, yeah. Anybody who has received any additional income that hasn't been taxed. So if they've got a job and then they've received some extra payments that haven't been taxed.
Like tips?
Tips, if they've maybe done a one-off extra project that falls outside the remit of their employment.
Dividends?
Dividends for shareholders of limited companies, yes. Anybody with income above £150,000 would need to prepare a tax return. Anybody with a capital gains disposal, so somebody who's maybe disposed of a property or shares in a business, they'd need to also do a tax return.
Anybody who's in a partnership?
Yes, yeah, partnerships. Trusts also need to do tax returns, although they're a slightly different tax return, but they also would need to do one. And anybody that is in receipt of child benefit that has earned over £60,000 and needs to start paying that back, that gets done via a tax return as well.
So quite a comprehensive list of people that need to do them. What is self-assessment?
It's not the most straightforward answer to give that one, is it?
I suppose. I'm a little bit older than you, so I remember the old system of taxation in the UK whereby you drip-fed details of your income and expenses to HMRC. There was no real strict deadlines, and eventually HMRC would collate all of the information, work out what your tax liability is. They would tell you what the liability was, and then you would pay it. And that was a really inefficient way of doing things. Sometimes you'd be paying tax years after the end of the actual tax year. So they brought in self-assessment, I think it was in 1998, whereby you had to file a tax return by the 31st of January, and you actually told HMRC what your liability was. And then they basically either believed you or asked questions and sort of checked the calculations that you'd done. So self-assessment is very radically different to how it used to be. You tell HMRC what your liability is, you pay the tax, and then it's up to them to decide whether or not to check what you've told them.
Some of those checks that they can do there, they can do automatically. So with real-time information and employers submitting salaries every month or week, depending on how frequently people are paid, they can match those up to tax returns already in their system.
Yeah.
And when they're doing their checks from limited companies, they can see dividends declared. So they've got a rough idea. They also know what child benefits people have claimed and whether they've got student loans in the system.
Yeah, so computers have made it much easier for HMRC to check the information that you're telling them, haven't they?
Yeah.
And if you do make a mistake, chances are they're going to spot that mistake and pull you up on it.
Yeah, it's usually around the self-employed partnerships where that is going on, believing what they've said, which is where the investigations tend to come a bit more from. But with making tax digital for self-employeds, that will change soon, and they'll be able to do that a bit easier as well.
So what are the deadlines around self-assessment and tax returns? Suppose if we start at the beginning of the year, 31st of January is the deadline for filing the tax return online. So the last tax year to end was the year to 5th of April 2024. So if you're filing a digital tax return, that has to be filed by the 31st of January 2025. On the same day, 31st of January 2025, you would pay any tax that's owing from that year. And then you'd also make your first payment on account for the next tax year, which is basically half of the estimated tax for the following year. And HMRC just assumes that your tax liability in the second year is the same as the first year, don't they?
Yeah, that's right.
So that's 31st of January. 5th of April is the end of the tax year. 6th of April is the start of the next tax year. Next deadline would be the 31st of July, when your second payment on account for the next year is payable. What happens if your income has dropped in the second year? So your actual tax liability is lower than the previous year. Is there anything you can do before the 31st of July to reduce the payment on account?
Yeah, so you can apply to HMRC to reduce that payment on account if you know that your tax is going to be lower. So what we suggest to our clients is getting their tax records into us early, so sort of April, May, June, so that we can get that tax return drafted and ready, so that if that payment does need reducing, there's time to apply to HMRC to do that. Because if you reduce it too much, then HMRC have the option to apply interest on the amount of tax that you've underpaid by. So it's always worth to get the actual tax return drafted so that you can actually get those correct figures in. But yeah, you can reduce that payment. It has to be done a few weeks before the end of July so that HMRC have time to process it as well.
Yeah, I suppose it's better to pay the correct amount of tax in July rather than pay the estimate and then try and wait for a refund after the event.
Yeah.
Because they're not particularly quick at paying refunds at the moment, are they?
No, and it might be that you due a refund, but you've still got a payment on account to make for the following year. So they would just offset that refund against that payment. So rather than getting it back to pay all of it back out again, they would just offset and you'd pay the small difference.
Yeah. Continuing along the deadlines, the next one after the 31st of July would be the 5th of October, which is the deadline for telling HMRC that you need to complete a tax return for the first time. Next deadline would be the deadline for filing a paper tax return. Mm-hmm. Not something we encourage, but some people do like to do things sort of the old-fashioned way. So if you're filing a paper tax return, you've got to file it by the 31st of October. And then I think the final deadline is the 30th of December, not the 31st, the 30th. That sometimes catches people out. Don't know why it's the 30th of December and not the 31st. Must be something to do with New Year's Eve.
Maybe.
Who knows? But if your tax liability is less than £3,000 and you want to pay that monthly through your pay-as-you-earn code, then you've got to make that application and file your online tax return by the 30th of December. And then your tax code would be adjusted for the following year. I think that's all the deadlines.
Yeah.
So what if I miss a deadline? What happens if you file your tax return late?
So if you miss the 31st of January deadline, HMRC will impose a £100 penalty upon you. They would also impose some interest on the liability that is owing at that point. And then after 30 days, those penalties increase, as does the chasing from HMRC. Ultimately, it could go down the court route, and it could escalate to that level. So anyone that has missed a tax return, they would receive a letter usually in February. And it's always advisable to get that tax return filed as straight after as you can.
Yeah. So, do you need an accountant to do your tax return, or can you do it yourself?
You can do it yourself on the HMRC website. You would register for your own gateway, register for the services, and complete your tax return on there. You don't have to have an accountant to file it for you.
We would obviously recommend that you do use an accountant to file your tax return for several reasons. I mean, tax returns are quite complicated. It's quite easy to get things wrong. And if you do get things wrong, dealing with HMRC and correcting everything can be quite intimidating and stressful. Also, because it's self-assessment, you really want to be assessing the amount of tax that you've got to pay correctly. Because if you overpay, that might not be spotted and you might not get it back.
There's also a few deductions that you can claim as well that not everybody's always aware of or necessarily knows how to treat correctly.
Yeah.
So if you've made contributions into a pension scheme, or if you're a higher rate taxpayer through employment and they've contributed into a pension scheme, there might be extra reliefs that can be claimed as well.
Yeah, gift aid payments. If you're self-employed or in business, what expenses are you able to claim against your income to reduce your profits and therefore reduce the tax? These things aren't necessarily flagged up on the tax return, are they? You've got to know it, or you've got to research it. So my argument would be that you can do it yourself. It's cheaper to do it yourself, but you may well end up paying more in tax. And if you're a busy business person, have you got the time to do a tax return? Would your time not be better spent growing your business? So how can 360 help? I suppose we've sort of answered that in that we can register individuals for self-assessment, we can prepare the tax returns, we can give them tax planning advice, so we can meet with them in the run-up to 5th of April to make sure that to discuss whether there's anything they can do before the end of the tax year to reduce the tax liability.
We also send various reminders out, reminding people when the tax liabilities are due, what amount, what reference number to use as well, just so that those payments don't get missed or don't get allocated to the wrong place, because then trying to get them reallocated takes time and effort.
So they're the most frequently asked questions we get about tax returns and self-assessment. If anybody does have any other questions, then please contact us at help@360accountants.co.uk or send us a message on one of our social media outlets. Thank you.